Hello and welcome to the Portfolio Podcast. On today's episode, we're going to talk about brokers. Now, this is our getting started guide to trading, but even if you're an advanced trader or you've been trading for a couple of years or even a couple of months, this might still interest you. You can always transfer to a new broker if it interests you. Let's get started.
Just for your interest, each of the brokers we're going to be covered will be done in timestamps in the description. So if you're just interested in our opinion of one particular broker, you can jump to that timestamp. Though we do recommend you do watch the full video so you can get a good overview of all the brokers we're looking at. I'll also leave a timestamp to our overviews at the end of the video.
We're going to talk about a few different terms to start with. So we're going to talk about stockbrokers. So basically, a stockbroker is the middleman. It's the middleman between you placing a trade on your app and the stock exchange taking your order. There is a bit of a time delay. Normally it's below half a millisecond or even 50 milliseconds even. And this can be done either by telephone, website or the broker's app on your end. And they have the license to be able to place it with the securities exchange or stock exchange. So only they can do it, unfortunately. But first we need to look at some definitions. So we are going to come across these in future slides. So an AGM is an annual general meeting. This is normally held once a year. Now, this is normally where the directors, CEO, they talk to their shareholders about the decisions that might be made. Maybe you'll have a vote. A lot of AGMs do end up having votes in them. And then you have things called extraordinary general meetings. These are basically like AGMs, but they happen in special occasions. So when something extraordinary happens. There's a few different types of fees you need to look at, Ryan, isn't there? So you got your amount paid per deal or per trade. So, for example, with Hargreaves Lansdown, you'll pay an amount of money to be able to put your money onto a stock, which sounds a bit weird, but it's how it works. The alternative is you pay a monthly, quarterly, or yearly fee, sometimes one of each, but this shouldn't put you off trading with that type of broker, because in some instances you'll see what's called a spread. So in the non-feed companies, these spreads are where they make their profit. So with these feed brokers, you may find a small spread between the buy and the sell price. With the brokers that are charging no fees or very little fees, you might see a bigger spread, which could actually impact your profit immediately as soon as you place that trade.
It's the Wolf of Wall Street mentality, isn't it? It's the people drip feeding off your accounts. They don't care if the stock goes up or down. They're just making money off the buying, selling. It's the way they do it.
When there's a spread, that broker kind of has in my opinion, has a bit of like a bit of bias of how long it takes to place that trade. That extra couple of milliseconds waiting in their research might get them a couple of extra, like half a cent here, a quarter of a penny there, So you just got to watch out for it. It's for their convenience a little bit, but just watch out for it.
Exactly. Yeah, exactly. But minimising that drain in your account from fees is quite a crucial one for obviously anybody, especially when you're trading small amounts and you're doing it on a fixed fee basis. If you're having to pay, doing £100 investment, you're paying £10 in fees, you're paying 10% of your thing.
Yeah, which is why we're going to also look at some brokers that don't charge fees, and some that do charge fees, but also some that charge very high fees. So you've got to look out of what you want out of your broker, but they obviously all do have their pros and cons with them as well. So just make sure you make your decision for you.
So the first broker we're going to look at is the one that you use.
I use Etoro. I wouldn't have gotten into investing if it wasn't for Etoro. They were my, it's what you see all over Facebook, all over Instagram, and it's the first app I downloaded and thought, I can put money in here and make some money. And I've done Forex in the past, and every Forex video you watch, there's an ad for Etoro in there. Etoro is, in my opinion, a great broker, especially for a newbie. You don't pay trading fees. You pay a very small conversion fee of 0.5% when you're trading from British pound to US dollar stocks, for example. But it's negligible. And a withdrawal fee is the only bit that you get a little bit stung on, because a lot of them are zero withdrawal fees. It's $5 for any amount. So not too bad in terms of fees. They do
it's
have
not horrendous when you do it as a percentage, is it?
Exactly. It doesn't sound a lot, but yeah, it can ramp up quite a lot though. It's an easy platform to use. That's one of the best things I can say about it, is that I can go onto my Etoro and I know exactly where everything is, and everything's labelled beautifully to make it as easy as they can for us, the user. But it can be glitchy. I've had some instances where I've been looking at my profit loss of current stocks, tried to order them and filter them so it was highest profit to lowest loss, or my biggest loss, and then after 20, 30 seconds, occasionally it would flick back to its original format, which did annoy me, but not enough to write home about. I don't know if you've had any
seen
glitches.
a lot of sort of reviews online that said similar things. They've experienced issues with that, and I know Hanny, the previous host, he'd had issues as well where he'd actually had his order closed out for him, and he hadn't actually done anything. And Etoro actually, it was when all that saga was going on with GameStop and all of that. He had his order shut out on him without him telling him to do it, so that was a bit strange as well.
One thing I do want to mention is that we're on the first one. But voting is something that myself, and I don't know about you, Ryan, but I'm quite passionate about at least having the access to my voting stock, which unfortunately Etoro don't offer. But there's some pros to the platform as well, and they are that it's easy to use, no fees for your trades, and relatively it's a low withdrawal fee. Let's be honest, $5. If you're withdrawing 10 grand, what's $5?
When you first start searching for stockbrokers, it's one of the ones that stands out to people because of the low trading fees and everything else. So it's Etoro, Trading 212. They're generally ones that hit your front burners and you start looking at, and it's a good way to start investing and get into it.
And it's heavily advertised. Now, I do want to go through this verbatim that's on what's on the slide now. So, obviously, they're not offering voting. So, they say, if you open a stock position on the Etoro platform investment platform, Etoro will hold the stocks on your behalf in a segregated omnibus account. Should the company issue dividends, your balance will be updated in accordance with your holdings. However, at the moment, you cannot use the allocated voting rights. Now, that sounds great the first, half of the sentence, but then if you look into like omnibus accounts, basically your money is in a big account with everyone else's money, and below that in Etoro's system, you've got your name on a piece of paper saying these are your stocks. You do get your dividends. I've received my first dividend.
Hey!
It was 17 cents.
You've officially graduated as a dividend investor.
But what I don't like about Etoro is that they don't allow you to use your allocated voting rights, which means most likely they're using them for you. So they're getting that say in the stock. I can't say that for sure, but that's my personal opinion. I don't see them wasting the vote, especially the amount of money they're holding probably in a lot of these companies, especially the more popular ones, for example, Coca-Cola.
I don't think it's wasting the vote. It's just you don't get to say. Etoro get to say if they. If I don't know if they do actually do the vote themselves, but theoretically they have
the power,
the authority to do that.
Yeah.
So they could be making decisions on your behalf that you're not aware of.
So next up we have Trading 212. Now, I was actually a little bit surprised about these guys. I think they've got some tricks up their sleeves in the coming months, years. They trade in 3 different native currencies. That's British pound, US dollar, and the euro. So that's already better than Etoro, in my opinion, because Etoro only trades in US dollar, which means you're always hitting those conversion charges. They're easy to use. It's a very intuitive platform, especially the mobile app. I must say they've got a great platform. It's probably on par with Etoro's, if I'm honest. It's not much different in terms of. It's obviously a different look, different use, but in how it's used is the same.
I used their free demo account, which was a long time ago now.
Yeah.
So there's been a lot of upgrades since then. But when I did use it, their user interface was fairly simplistic, fairly easy to use.
I think you said that about Etoro as well, though. EToro has a fairly simplistic viewing system, and it's nice. It's a good system, I think. Right, so the fees for these guys. So when you are depositing, when you hit the £2,000 total deposited over however long you have the account, there's no deposit fees until you hit that £2,000 mark. Everything above that is charged at 0.7%, which isn't steep. Too bad, but it's still money.
It's not horrendous, but it's still steep.
But then when you look at that and you compare it to the conversion charge of Etoro at 0.5%, this is 0.15%, which is a lot lower. So in reality, it's not much different if you put them together.
Yeah. I mean, total fee 0.85%. Yeah. Providing if you're trading into US stocks, if you're predominantly trading UK stocks,
exactly.
Obviously you don't hit that. So.
Exactly. Also, as a starter account, starting to trade, getting some money in there, if you have £1,950 like I do, then it's not affecting me yet. And I'm in profit, so that's not all deposited money. It's only the deposited money that gets that 0.7%. It's over £2,000 of deposited funds. low minimum deposits. You can deposit as little as £10, which a lot of them are, 50, 100. There's no voting again. So you'll see here that Trading 202 also have a big statement about voting. So, introducing the option to exercise voting rights through the platform as a permanent feature is something we are actively working on as we strive towards our client satisfaction. Any changes will be announced as soon as possible. That is brilliant.
Something they're working on. It's good. It's good to see they're taking that sort of feedback from their customer base.
Exactly.
It's been brought forward and trying to work on it. So
Love it. Interesting one. Next up is Hargreaves Lansdown. So
my home.
Yeah, Ryan's portfolio is all with Hargreaves Lansdown, I believe, at the moment, right?
Yeah, with the exception of obviously all my crypto, and I've got one or two sort of pre-seeding round funds which are way off somewhere that I just ignore because I can't do anything with them anyway.
Right. Okay.
They float.
So I've done a bit of research from reviews. People are saying that it's not as 21st century. Windows, whatever we are now, 10 is it?
10,
yeah, it's not as Windows 10-esque as people would probably like it to be these days. But those like older traders, the more advanced in years traders, they might enjoy the slightly more basic Windows 7 kind of layout.
Calling me old.
I am calling you old, Ryan. Yeah. Advanced in years, eh?
Yeah, I can see what you're saying there. Like the user interface, it's okay to use.
Yeah.
It's fine.
It's very Excel 2005.
Yeah. It's probably a good way of phrasing it.
Yeah. But it's very easy to navigate, which is what I do love about it. Is that it's a case of there are tabs at the top. You can click a tab and you go to where you want to go. There's none of this pressing into 5 different places to get somewhere. There's tabs. All your research is in different tabs, right?
Mm-hmm.
Nice and easy.
It's been nice and clear. You've got access to your fiscal reports. You've got access to your quarterly reports. You've got a quick summary table of sort of profit, loss, all that kind of thing. Very quick and easy to look at summary. I think in terms of research, they're one of the better platforms for it, and
definitely
they also give you access to some of the news feeds on some of the companies as well.
Hargreaves Lansdown fees, on the other hand, are actually a little bit on the high side, aren't they, Ryan? $11.95 per deal.
Yeah, don't get me started on the fees. I get absolutely stung for them, unfortunately.
How many deals do you place a month on average?
It's purely because of the fees. I stick to one deal a month because it's a fixed £11.95 fee per trade.
Yeah, so you're putting on a big trade,
big enough volume. Yeah, if I don't trade in big enough volume, I get absolutely slammed on the fees.
So whereas people like me, who are just starting out, I kind of want to spread my money across these tiny little investments and try and diversify fast. What would you recommend? Would you say diversifying fast is good, or do you think if you had the option, would you be diversifying quicker, like putting money into each month? A bit more like dollar cost average.
For me, I'm okay because I'm already fairly diverse. So I've got 20 plus different stocks. So in terms of having a diverse portfolio, it's not horrendous. So I can afford to put the bigger lumps in.
Right. Okay.
But for a new investor, I would probably take a different broker to start with, and
maybe transfer later. Get
that diversity out there. Etoro is a fantastic starting place for newbies, but it's not the broker to use, in my opinion.
Yeah, I would agree with that.
The main thing to point out here is the exchange fees of 1% from when you're trading from pounds to US dollars, because that alone has forced me to go quite heavily into UK stocks, because it's like, right, okay, well, if I'm trading 1,200 quid in one trade, I'm already paying 1% in the deal fee.
Yeah.
I don't want to then pay another 1% on that because I've 2% swing and then 2% coming back out. I've got to be in profit 4% before I even break even, if that makes sense. So
it's a lot of money.
It is a lot of money. It's one of the reasons I'm actually looking at moving away from Hargreaves eventually.
Right. Okay.
But the big pros, as you've put on there, is the massive stock selection for me.
There is a big pro, and from all of the brokers that I've looked at that I was interested in myself, Hargreaves Lansdown, hands down, has the best.
Hands down.
Has the best of stock portfolio available to you out of every broker I've seen. Like, I don't think I've found a single one that offers as many markets as Hargreaves Lansdown does, and that's just from my personal research. But I can't find one.
No, absolutely. I mean, my biggest and most profitable holding in Sociedad, ticker SQM that I've got. You put that into other brokers and they go, huh?
Who's this?
Who are they? Never heard of them. You know what I mean? But yeah, they're one of my most profitable trades, and I can only access them through Hargreaves. So it might be the case, even if I move away from Hargreaves, it might ultimately end up being a case I have to keep some stocks on my Hargreaves account because they're the only place I can access them. So.
Which isn't a problem, having multiple brokers. I think that's actually quite a good thing to have in some instances, especially with the money that you've got. When your stock portfolio moves to the £85,000 mark, that's the only amount of money that's covered in one broker account. So it's either a case of setting up another Hargreaves Lansdown broker account, or having another broker. Else, if Hargreaves Lansdown have a problem and they, for example, go bust, I very much doubt they're ever going to do that. But at least your money's covered.
Yeah. One of my other big reasons for moving as well is the ISA, which we're going to do a whole another episode on explaining taxable fees on that. But I'm starting to get towards a stage where I have to start paying tax on my dividends because it's held outside of an ISA account. Now, the only reason it's held outside the ISA account is their 0.45% fee. Yeah, okay, it's capped at £45 a year, but I don't want to end up paying fees for the sake of paying fees and keeping them in ISA. I'm not being taxed at the moment because I'm below the threshold of being taxed, so why would I then go and spend an extra 45 quid a year to keep it in?
And just to think that going up by £1 above that threshold and you're starting to get taxed, and that's, you know, it's hard to think about, but that happens in every walk of life with your salary and with this, you know.
Yeah, exactly. So I'm now in this sort of getting towards a stage now where I need to actually look at saying, right, okay, I need to take them out of the normal stocks and shares account and transition them into an ISA to start protecting myself from.
What's the I'm assuming there's going to be transfer fees with that, though, isn't there? So just
no, most brokers generally just deal with it. It generally, as long as it's in their ISA, the broker you're dealing with, you say, I want to transfer them from here, and then they'll contact Hargreaves and get in contact. And I suspect you'll probably get a call from them or a message from going, oh, are you sure you want to leave us? You're making us load of money in exchange fees. And I'll be like, yeah, get lost, you're too expensive.
One thing I want to mention is the cons of Hargreaves Lansdown. So a lot of brokers offer demo accounts, okay? Now, Hargreaves Lansdown have a web-based page, a app-based page, and like a web app-based page. So you can go onto the, your mobile, Google, and go onto their page as well. But they only offer a demo account on the mobile app. They don't offer it on the website or on the web page app.
That's a good point, actually, because the mobile app itself, in terms of UI, because I use it on my own personal mobile all the time, you don't get access to the full shebang. You don't get access to all the glory.
It's not as impressive. IG are I think, potentially sort of on par with Hargreaves Lansdown, but in different ways. They actually offer 6 native currencies, whereas Hargreaves Lansdown only offer 1. So these guys offer British pound, dollar, euro, Australian dollar, Singapore dollar, and Hong Kong dollar. I'm going to ignore fees for now. Just note that the conversion fees from British pound to US dollar is 0.5%. So it's normally about the average. If voting, well, hey, yes, you can. But if you want to go to the AGM in person, you've got to pay £100 arranging fee, which I haven't actually seen on any other broker anywhere as an arrangement fee. Most of them kind of just have it as a normal thing to do. I put this up as a pro and a con, Ryan. So they've got a large number of stocks available, but I've also said that they've got a limited portfolio. But that's compared to Hargreaves Lansdown and Trading 212. I feel like IG have a great selection of shares to look at, but they're just not as... They don't offer as much as Hargreaves Lansdown and Trading 212.
Yeah, I would completely agree with that as well. I mean, IG is one of the ones I'm actually looking at transitioning to.
Myself included.
Hargreaves. But as you said, that is the limiting factor for me, is the availability of certain stocks. So if I decided I want to transfer everything, I couldn't do that.
That stock you mentioned earlier might not be on there. Basically, with how this fees package works, you can almost trade for nothing in certain circumstances. TM. So we're going to go through the IG fees. We're going to take it a little bit slower because it's a bit complicated, isn't it, Ryan?
Yeah. It took me 3 or 4 times of reading to get my head around and work out what I'm actually trying to say with it.
Back on the definition slide ages ago, we spoke about fees. So there are 2 different types of fees here, and IG do charge both, okay? So we'll start off at the top. We're going to look at your trading fees, okay? If you place 0 to 2 trades per month, in the month previous to the month you're currently in, then you have the normal standard rates, which for US stocks is $10, and for UK stocks is £8. Sorry. But if you place 3 or more trades in the previous month, then your US stocks are now free. You do not need to pay any trading or dealing charges to place your trade, which I think's pretty amazing.
Yeah, with the exception of the 0.5%
Yeah,
exchange
with
rate
the
or
conversion fees.
transfer fee.
Yeah.
Yeah, so but even still, 0.5% is not bad as long as you're not trading massive.
Better than paying 0.5% plus 10 quid. That's for sure.
Yeah.
Now with your UK stocks, you don't get them for free. It goes from 8 down to 3, so you save a fiver on every trade, but £3 a trade. I don't think I've found that in many brokers, if I'm honest. And I've researched at least 25, 30 brokers in the last week.
Yeah.
Yeah, that's pretty damn low. And that's
it's good though, because effectively you're gonna get slammed in your first month for fees.
Yeah.
But once you get past that hurdle, so you make sure you get them 3 trades in your first month, you're paying 30 quid in fees if you're doing US, or 24 quid if you're trading UK shares, and then the next month you live in it, as long as you just make sure you keep putting down them 3 trades. And I would focus on probably putting down small trades on US shares just to get the first 2 in, and then a bigger one on UK if that's what you're interested in.
So now we're going to talk about custodial fees. Okay, so this is how some brokers make their money. Basically, for holding on to your money and keeping it safe, they're going to charge you a fee. But with IG, they charge you £24 a quarter. That's every 3 months. Okay, that's only if you place up to 2 trades, so 0, 1 or 2 trades in the quarter. If you place 3 trades in the quarter previous, it's free from then on, as long as you continue to place three trades a quarter. So if you're hitting your 3 trades a month mark, you don't need to worry about that custodial fee, because it's gone. All you're now paying is for your UK stocks, as long as you keep on top of those 3 trades a month. So my recommendation, if you were to go with IG, is say if you're putting, I don't know, let's just say £500 a month into investments, put a third in for the first 3 weeks of the month on 3 different trades. Even if it's to the same company, I don't care if it's to the same company, different companies, just put it in 3 different places in the month, and you've done it.
Exactly.
You've got your trades for basically nothing,
Exactly. And that fee structure is one of the big reasons I'm now looking personally at moving away from HL and moving to IG, because that is a huge saving in terms of fees. I think I looked at my portfolio the other day, and I've put in maybe over £800 in fees so far on Hargreaves in 2 years. So
it's a lot.
It tots up very quickly.
And at the end of the day, even if you hit the custodial charges, but then have to pay the trading fees, that's still less than Hargreaves. It's still less than £11.95 per trade. Even the US at £10, it's not much difference, but it is a difference at the end of the day. So either way, I don't think you're massively harmed. I think it's a pretty solid option. It's a bit confusing, I get it. It took us a while, but might be a contender. Next up, I think we have BestInvest, and these guys are someone that I was actually looking into quite thoroughly, because I was considering starting to trade with these guys. They have a pretty average middle ground sort of fee of £7.50 per trade. There's no extra hoo-ha. There's no place so many trades you get them cheaper. There's none of that. It's just £7.50 a trade, and that's not a bad price if you ask me, Ron. What do you think?
It's competitive. It's middle of the market, so they'll do okay with it.
Voting. They allow voting, and you can also arrange to go to the AGM. There is no fee. All you need to do is send a letter from a form you have to print off in the post. It's no online-based version of that. You have to send it by post.
It's a bit of a faff in the modern age, really, isn't it?
Yeah, you would have thought it'd be a bit easier, but for the AGM attendance, you have to do it by post. I believe the voting you can do via their internet page or app. I did do a quick review on TripAdvisor, which I'll get to in a second, because I was a little bit disappointed. But the pros first. It's an average cost, no strings attached. Great education package. It's one of the things that they pride themselves on, is having a really good education for their users. So not only are you getting hints and tips from us, you can also have hints and tips from some, let's call them financial experts. Maybe not trading experts, but financial experts, right? But remember,
just come to TPP for that. It's fine. We'll
exactly. But remember, the guys that are making this education are the guys that are trying to make money out of your investments. So, take it with a pinch of salt, but taking the information. That's how I've kind of learned to take broker information, broker investment guide. As you put there, Ryan, an ISA 0.4% charge, and it's not capped, is it?
No, that's a bad one. So if you get to the stage where you're fortunate enough to grow in sort of £100,000 portfolio, you're going to be paying £400 a year,
which is a lot.
Which is a horrendous amount.
Yeah.
So, again, it's not a bad one for probably an early / middle of the ground trader, but once you get into the later ones,
maybe up to about 10 grand, maybe 40 quid a year, you wouldn't mind.
Yeah.
But then if you have an ISA, you want to have that forever. So, you know.
And you think they're charging you 0.4%, and you earning 4% in dividends is your target. You've now got to be targeting 4.4%.
So the cons, I mentioned about TripAdvisor. I did a little search for BestInvest on TripAdvisor, and I saw there were 21% bad reviews, and this is over 1,000 reviews on there. And there were some people stating they've been refused their withdrawals, been refused to have their money back to them into their actual bank account.
Yeah.
So it kind of put me off a little bit. I know you can't take that stuff as gospel. That some of them might just be keyboard warriors, but when there's 21% of people saying bad stuff about them,
fairly extensive.
They went down in my estimations a little bit, if I'm honest. And that was only a couple of hours ago that I saw that, and I thought we've got to put that in. So
yeah.
Just be wary and do your own research on these guys if you do think about investing in them.
Yeah.
Okay.
Yeah.
AJ Bell. So these guys, I don't think you've heard of these before, have you, Ryan? Before I mentioned.
No, I haven't looked at AJ Bell at all.
Yeah,
so it's new to me.
So it's a UK based broker. That's why they only take GBP as their native currency. One of the things that I found from reviews is that it's a really easy to use platform. Okay, their fees are not dissimilar to Hargreaves Lansdown and BestInvest. £9.95 per trade deal, but if you place more than 10 in the month previous, then it goes into £4.95. Now that's a lot of trades, Ryan. Have you ever placed 10 a month?
Not that I can remember. No.
I don't even think I've placed.
I think I've done 3 max.
I don't even think I've placed 10 a month. Maybe this month I think I've placed 6, and that's it now until next month. That's all I can afford to put in there. And if I was to have those fees taken away from me, especially even in the first month, that's a hell of a lot of my money.
Yeah, absolutely.
So just trying to hit those targets is pretty unrealistic for me on the salary that I'm on. But if you're a big earner or you've got a lot of money just sitting around in a savings account, you want to start investing slowly, maybe these guys are good for you. £4.95 per trade. And there's only a 2.25 custody fee per year as well. There's no negative trading cover. So if any of you guys want to do, I wouldn't advise it, but want to do leverage trading, then if you go into negative, it's not covered. So if you do go down to minus £1,000 in your account, you've got to pay that. You owe that. That is
flipping it, right? So they don't have that stopping point.
Yeah, they don't have a zero stop. You can go below zero.
Right.
So
interesting.
If you are leverage trading, don't. But be careful if you are. On the upside, though, they are easy to use, and apparently their education content is like really high quality productions. So it's really nice to watch rather than just educational. You can sit there and watch a few and not be going, oh, look at this quality, They have 2-stage verification, so it's a secure site. A lot of them are just password login done. And the one thing is the ISA. They charge a 0.25% fee annually, but it's capped at a maximum of £3.50 per month. So that's not too
horrendous.
bad. What's
Slightly
that?
better than
£42 a year, and Hargreaves is 47.
45.
But you can vote really easily on these guys. So they have the voting through their app, but I haven't found anything yet that talks about their AGMs. For the companies you own. So might be something to look into if you do want to go with them. Personally, it's not one for me. I don't think. I don't know about you, Ryan.
No, again, personally, not for me. It's just there's no standout features for it, if that makes sense. It's all sort of middle or high ground on things. So it's like there's nothing here that floats my boat.
And that 10 a month really puts me off because it's like setting quite a high bar that not many people are going to hit. The last one that we're going to talk about is Freetrade. Now, Ryan actually mentioned these to me yesterday, and I got so deep into the research of them that I actually considered just joining there and then.
You got done by the advertising.
I did. Like they are like a really good company, a really good broker for what you're paying. I mean, which is basically, says it in the name, basically free. you've got a really, really small amount of stocks to choose from. It's US and UK markets only, and even then, you're not going to get all of the companies. You're going to get the popular ones, I believe. But it's got a two-factor login, a bit like AJ Bell's, nice and secure. They have a live chat for support, which is 24-hour live support, which is, I think, is a great feature that I haven't seen advertised on any of the sites of the other brokers. So I like that. They're easy to use, and there is no fees except from your conversion fees from British pound to US dollar or any other. If you go to their premium, then you can also trade other markets such as Australian or Hong Kong. So if you go to the premium, it's $9.99 a month, which, I mean, if you're getting everything else for free, maybe $9.99 a month isn't that bad. That's one trade. That's less than one trade with Hargreaves.
Exactly. Exactly. I mean, a while back, I actually opened a Freetrade account because it was back in the day when they were offering a free share that came with it, and I think I got one in Page Group.
Right. Okay.
And
how are they doing?
I haven't opened the app since I've done it. It was pointless me opening it. I put the £1 in and still got the one share in there. I just don't use it. I mean, it's appealing with the no fees and this, that, and the other. It's supposed to be a UK version of Robinhood because you can't get Robinhood in the UK. That's exactly what it's intended to be. But at the time when I opened it, I think they were only offering something like 600 shares which you could invest in. You compare that to like the 24,000 of Hargreaves, and it's like, oh, right, okay, I'm really, really limited to what I'm doing here. And that was one of the big downsides for me.
But there's no withdrawal fees, and unless you select same day withdrawal, then it's I think it's £5. And there's no trade fees. The only time you have trade fees is if you're doing a sell order, which personally I don't do. In Forex, you do them all the time because you're just trying to get those small pips. But in trading, our strategy is to invest for the long term and get those dividends coming in. So we don't need to worry about that in our trading strategy. The conversion fee is still 0.5%, as I said before, or as an average. But that's generally not free trade. That's just the Forex market, effectively. They're swapping our British pound for US dollar. That's all that's happening. They don't do voting, but it says clearly on the website they are looking into it in their help and support section. So that's good. I think that's promising,
From my brief experience of it, I mean, the UI is pretty clean. It's very simple. Again, it's very Robinhood. Yes, you get just line graphs. There's not much on the actual app itself.
And they don't have a desktop platform.
And exactly. And I think in a way it's getting to the stage where it's going to be in the ballpark of Etoro and Trading 212. It's an entry level account.
It is.
It's good to get you into it, but it's not really for long term trading.
Yeah, I think for those first few thousands, that's a really good. Yeah, it's a really good way of putting it. Those first few thousands, it's great for. Maybe after that, look at a broker that, yes, charges fees, yes, is literally telling you how much money they're taking off you. But like with Freetrade, they're probably making money from the spread because they're going to make their money somehow, right? Yes, they've got the premium, but they've also got that difference between the buy and sell price with your price, the actual price sitting there somewhere in the middle. And I think it's a great company for newbies, but I don't think it's something that I would want to move into now. I think it's too late in the game for me to go with these guys. If 3 months ago I had gone with these guys, it would have been no different to me joining Etoro. But I just might have different stocks because of the offerings available.
Overall reviews on them.
This is
again, I think the key thing to point out here, though, this is our own opinions. Make sure you go out, do your own research, look at what you've gone out there, and
definitely
pick the broker that's best for you.
Definitely. So. This is the TPP star rating. It has, this is from our minds and from how we feel, nothing else. Okay, so we've put Etoro there. It's out of 10. Etoro's there at 4. We think it's great for newbies, but they have withdrawal fees, and that's something you've got to deal with. It's free to trade, and they've got their spread to make their money, and I think it's great. I use it myself, but I am looking to potentially move forward. Trading 212, I think they are a little bit better than Etoro for the sole reason of they're looking into the voting. I think their platforms are pretty similar, so that it's the voting that really just pushes it 1 star up for me. I think when they get voting, add another star maybe. I think they might be worth it,
Absolutely.
Especially as you can request your trading certificates as well, which I think's something that I didn't expect from them. Hargreaves Lansdown, you can see there, it's 9 out of 10 stars. I'm really reluctant to give 10 stars because, in my opinion, to get 10 stars, you need to have massive amounts of stocks available, low fees, no withdrawal fees, and a conversion fee like are in the average range at least. And Hargreaves has 3 of them.
Yeah.
It doesn't have, well, this way it has 2 of them.
Fees is the major downfall.
Yeah,
Unfortunately.
it has 2 of those 4, and so does IG, which is why they've got the same star rating. But they're both great choices. It's just then I think down to just personal preference. And for me, those fees are too much for me to join Hargreaves. But IG could definitely tempt me. But there are a lot.
I mean, personally, for me, I'm looking at IG being half a star better than Hargreaves, if even quarter of a star.
Yeah,
but it's enough, especially on the fees, for me to consider actually moving.
For you, right? Because you've got such a large investment portfolio, like IG being able to save you that much money per trade, like is quite a lot. Even for me as a small time trader, I could be saving a heck of a lot of money just from negating with my withdrawal fees and my just being able to trade for free on US stocks. Yes, I'm going to have to start paying for UK stocks, but what's that in reality when I'm getting a company that allows me to vote? Is that worth £3 on my UK stocks? I'd say yes, in my opinion. You know, BestInvest. Originally, I put them down as 8 stars, and it was just that today's look at the TripAdvisor that dropped them down 2 for me, because I was actually a little bit disappointed. Maybe I was a bit harsh. I don't know. What do you think?
No, I think it's fair enough. I mean, the people speak on things. You know, it's the power of the internet. People march with their feet, or in this case, their keyboards, and put it on there. And I think it's a really good benchmark to just say, well, 21% of people are saying that there's problems here. It's not an insignificant percentage, if you know what I mean. So it's enough to get the cogs turning and worrying. Yeah. So
weirdly, one of the sites that I went onto had BestInvest down as 3 out of 5 stars, which actually matches what we've put here. 6 out of 10 stars, you know.
Copy them.
Copy and paste. AJ Bell, I put them at the same as BestInvest. I like them, but they are just not. They're just not there for me. You know, they're not the broker that I would go with. It's a hard thing to do, these star ratings, because at the end of the day, it's down to personal preference, and Ryan might have a completely different star rating to what I've put, but we've agreed on these. So if I was to do it on my own, maybe the stars would be, you know, a couple, half a star here, half a star there, and same for Ryan. But this is our joint feelings on this, and we've actually put Freetrade above AJ Bell. And
yeah, says a lot.
Yeah, and above BestInvest and Trading 212 and Etoro, and it is the fees. The fees will draw people in, and I think it's a great thing, because if I had started and not had to pay a withdrawal fee, just knowing in the back of my mind I will never have to pay a withdrawal fee, I probably would have gone with Freetrade over Etoro when I first started if I had known about them. And I think that just
it's that entry level, isn't it?
Yeah.
It's that entry level account. I think Freetrade is a very good entry level account because of the low fees and everything. So if you're only playing around with small amounts of money, you're not going to get messed around by an exchange. So it's a good way to do it. But again, Freetrade for me, it's not the final say in brokers. It's not there yet. You would use it as a stepping stone.
Exactly. I mean, I don't know about the Freetrade Premium. They might be incredible. I didn't do too much research into that because I didn't want to start adding, you know, if you buy this package, you know, it's just a bit too much to add into one video. I will leave a link in the description to a website that I was actually using to do my research on, and it gives you a list of hundreds of brokers for your country. And we'll just leave a link down there. It's an amazing website, and I definitely recommend looking into that and reading the whole thing about the broker that you want to go with before you make your decision. Fantastic. We love seeing your comments on our YouTube channel. We absolutely love it, don't we, Ryan? And you know,
we do. I like a bit. I like positive reinforcement, like feedback.
I also like negative comments. You know, I like them telling us we've done something wrong, because at least we learn. You know.
Yeah, exactly. And I like that's exactly it. I like having a discussion about things. The whole idea of this channel is it becomes a community. It's let's sit down and have a couple of things. If we've said something that isn't correct, let us know. If we said something we don't agree with, let us know. Let's have a discussion about it. Let's have a talk about it.
Exactly.
The whole point of investing is you get people's opinions. It's not a one-sided thing. So.
And if you do want to have a in-depth chat with us, like pre a video uploading, you know, previous answer on the video, you can always join our Discord and we can have a text conversation about it there, which, you know, we're more than happy to do throughout the week.
First comment off the video was cased in time. Has put the comment, did you add Fraser Group? That was a belter. Now, I don't think Fraser Group's something we've discussed. No, it wasn't one we discussed, but I did have a quick look at them from there, and on behalf of both of us, I don't think it's something necessarily we would hold in our portfolios. Reason being, it's not a dividend stock.
Are these the clothes guys?
No, I don't think it is. So they seem to be owners of intellectual property. They seem to buy up and hold intellectual properties as sort of an investment.
Right,
now,
okay.
It's probably more of a growth stock. You look at their share prices, and it is supposed to be sort of a upward trending stock based on the value of the intellectual property they actually hold. But it's not a dividend payer, so therefore it's not necessarily something I would add to my portfolio personally.
Yeah.
So, but thank you very much for your comment.
Yeah.
It gave me some time to go to do some research and look at something a bit different. So absolutely fantastic.
Thank you very much.
Second comment was from our boy Jack. He's back again. Good old Jack, he always leaves a comment. Absolutely fantastic. Talking of takeover bids, so this is on the old Morrison's video, which you'll see in the pop-up banner up there. About the Morrison's takeover bid is talking of takeover bids. Have a look into BT. Now, I actually hold some BT in my portfolio. I bought in the early days, and they cut their dividend during the pandemic and brought the share price down. But there has been rumours of a takeover bid. There's nothing official in the news yet, but effectively there's a shareholder who's bought up 12% stake, and so because of that he's been also trying. Well, he's bought up a 12% stake. Now, there's media rumours that he's going to do a takeover bid. He's publicly denied it, but he is trying to increase his stake. Right. So they're almost like, okay, well, why is that going on? So yeah. Those rumours, I think, have been helping to carry up the share price. There is nothing official. It is something I'm going to keep my eye on.
Is it something worth me putting some money in now, do you think, Ryan?
You probably need to have a bit more of a read around first and just see what's going on with it. Look into BT first. Obviously, do your due diligence, read into the financial reports, because they've got their problems.
Because obviously, I don't want to miss the boat like Morrison's, so it's definitely worth looking into it now and trying to get a basis of how they work, you know.
Correct. Real. Do your dividends on, but it's not a fantastically perfect dividend paying company. It doesn't have a dividend at the moment. Their 5G rollout is running behind schedule. They've got a fair amount of debt on them, and they've got issues with paying into their pension pot, so they're not sort of like a gold standard dividend company you will look into.
Right.
I mean, so I responded to Jack's comment on when he first posted it. I'm actually still 10% down on those shares from when I bought them previously. So for me, if they did a takeover bid and they were buying them, that would hopefully swing them into profit, and I would probably be quite happy to drop those shares anyway. So when my vote comes through on Hargreaves going, oh, do you want to accept this takeover bid?
Yes.
You can have my green tick, as far as I'm concerned. So.
If anyone has any questions they want us to bring up in videos in the future, then just go onto our Discord. The link's in the description for the Discord. Just drop us some topics. If you want something spoken about or researched by us, then we can look into it and we can look at putting a video together if it's something that we feel like the community would benefit from. We are now on Spotify, guys. So I know I know my audio is not the best on here, but I am recording on another application as well through the same mic. So I'm going to try and get that audio to a good place for you guys through there. We're going to try and do the same for the YouTube videos. I don't know what's going on. We are trying to fix the problem. If you can't spare, the time to watch the video, maybe while you're driving, you can listen to the podcast. While you're cleaning, while you're cooking, just go for it. Get that investment knowledge.
I think it's more a case I don't want to see our ugly mugs more.
I was trying not to say that, Ryan. God, get down to Spotify. We're also on Apple Pods, Google Pods, and Amazon Music. Okay, so just type in the Portfolio Podcast, all one word, okay, and you will find us on all of those streaming devices.
Right, well, thank you very much for watching, guys. We hope you enjoyed that episode and our opinions on these brokers. Let us know in the comments which brokers you're using. Let us know if you're thinking of transfer, and we're interested to hear what other people's opinions are on them, because for all we know, you might have some hidden broker under the background we haven't covered here that is 10 out of 10 stars, as would be a TPP review.
And guys, thank you for watching the Portfolio Podcast.
See ya.